let me ask you something. What if trading too small was actually hurting your performance? Now, I know that sounds crazy, right? Because everywhere you look in trading, people are telling you, reduce your risk, trade small, protect your capital. But what if, just what if, that advice taken the wrong way is quietly sabotaging your growth? That's exactly what we're breaking down today. Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. Another video version for you. Hello, YouTube audience, although you guys see me throughout the week anyway from all the videos that I'm posting on here. Now, real quick, if you are someone who only checks out the YouTube channel for my content and you're feeling a little bit of a FOMO because you're missing out on all of the cool audio only content that we're doing, I would recommend following the podcast over on Spotify because they do both the audio and the visual versions of it. That way you don't have to kind of bounce around from platform to platform. You get it all in one place. Because although the Trading Coach Podcast comes out 3 times a week, every Monday, Wednesday, and Friday consistently, I'm pretty inconsistent about which episode is on video and which episode is not. It's kind of just depends on what I feel like doing. All right, so the other day, we were talking about risk in trading, and I shared a quote with you from one of my mentors that stuck with me for years, really up into this day. And the quote was something like this: Akil, or insert your name, as a newer trader, you should trade so small that a win isn't life-changing. You can't just go out and buy a new house or car or anything like that. But at the same time, a loss isn't devastating. It doesn't take you into the poorhouse. Now, the idea behind that is pretty simple. We are emotionally attached to money, right? And that attachment, well, that's where most of our trading mistakes come from. So the idea is that if we can reduce the financial impact that we take in the market, if we can lower the stakes, we can start to trade with more freedom, fewer emotions, or rather act on fewer emotions, and we face fewer psychological barriers, right? These are all the things that it takes to be a consistently profitable trader. Makes perfect sense, right? But then, right, as I was going through the comment section on my YouTube channel, I saw a very interesting question, and it completely flipped the perspective. I'll share it with you guys up here. But the trader said, quote, I think one can also become blasé, right? Just, what's blasé? Another word for blasé. Just like you're nonchalant, you're kind of just like, I don't know, lazy. There's a word that I need to know for it, and I can't remember it to save my life, but just too comfortable. Let's put it like that. I think one can also become blasé, too comfortable, knowing that the threat of losing such small amounts doesn't matter. Hence, why they're able to continually lose and the financial consequences doesn't worry them so much. So pretty much what the quote said is that trading small can make you more careless because if the losses don't hurt, what's stopping someone from just losing over and over again without concern because it doesn't hurt? And I'll be honest with you, right? I'm nearly 19 years into my trading journey, hence the bald head and the gray hairs, a very stressful industry we're in. And I'm almost 15 years into coaching, which is almost as stressful as trading because I actually care about the traders I work with and their success stories. And a lot of the traders that I work with, well, they have wrong mindsets and not all of them are interested in changing, which kind of I take personally sometimes. But anyway, in all those years of trading and coaching and stress, I never actually considered that angle before. So of course, being the open-minded, growth mindset individual that I am, I wanted to dig into it. Now, for you guys that know me, I love being a contrarian. I believe that's probably one of the reasons I always wanted to be an entrepreneur because everyone told me that I couldn't be an entrepreneur. That's one of the reasons I wanted to succeed at trading because everyone said I couldn't succeed at trading. It's also the reason I'm an Everton supporter, and I so clearly enjoy the pain of watching them play each and every week, especially the pain of last week's loss in the very last minutes against Liverpool. My heart. Anywho, I was excited about digging into this way of thinking, and I thought to myself, right, so let me build a case here. Let me prove how trading small can actually be a bad thing. But after sitting with it for a few days and doing all the weird stuff I do to clear my mind and get creative and actually, not force an idea, I couldn't do it. And I even threw the question or the comment out to you guys on the YouTube community tab, which I'll share with you the results later, to see what you guys thought, if anyone was in agreement with myself, and see if I can get some more ideas that would maybe, open up some more doors to making this point. And I couldn't. Now, that doesn't mean the comment is wrong. It can certainly happen, but here's the key. Trading small isn't the problem. The problem is deeper. The problem lies with the individual. Because at the core, both sides, the trading small good, the trading small bad, they're pretty much looking at the same thing, right? Trading size or trading small size reduces your financial consequences, right? That's a fact. I think both parties can agree upon that. But what changes is how you respond to that. So on one side, it reduces stress, it frees you up mentally, and it allows you to execute your strategy consistently and to perfection, right? Do the things that you're supposed to do in the market. On the other hand, it might make someone lazy and careless and even reckless. Now, here's my take. That's not a choice, right, between good or bad that you make in the moment. That is a choice that you have already made. I'm probably going to butcher this, but I know many of you guys have probably heard this before, so you get what I'm saying. There's a quote out there or a saying that says, money doesn't change you, it reveals who you are. And it's in reference to people are, a certain way before they have money. Then when they become rich and famous and successful, they change and they start doing all this stuff. And the idea is that, no, the money didn't change them. The money didn't make them do all this weird, crazy, bad stuff. They always wanted to do that. That was always within them. The money just allowed them the freedom or the confidence, whatever it may be, to do it. And I believe the same thing about this. It's already naturally inside of you. You see, if you're someone who values discipline, if you're someone who focuses on process over outcome, if you're someone who genuinely wants to improve, right? Kaizen philosophy, small consistent improvements or small consistent changes for the better. Trading small is a gift, right? It allows you to do this. It allows you to make more mistakes. It allows you to financially survive those mistakes. Mentally and financially survive those mistakes. It allows you to learn from those mistakes, and it allows you to stay in the game long enough to actually get good, which is easier said than done. One analogy or reference I like for that is kind of the poker reference, where it's like in trading, or in poker, what you need is a chip and a chair. And what that means is if you have a chip, money, the gambling version of money, whatever like that, you can have a seat at the poker table. If you can have a seat at the poker table, you can involve yourself in the game. If you can involve yourself in the game, you give yourself a chance to win and make money. Trading is the same way, right? Our chip is our account size. If we have money in our account, we can analyze the markets and actually place trades. In order to make money in the market, we need to place trades. If I don't have a chip, I can't get involved in the poker game. I have to leave the table. If I don't have any money in my trading account, I can have the best trading setup in the world, but I can't participate. Therefore, I can't make money off of it. So a big part of trading is just being able to trade. There is going to be this time where you're just bad. And if you're doing the right things, and this is on you, you're slowly improving to get better. But if you run out of money before you have the chance to get better, you're never going to be able to reap the benefits of anything. And you've just wasted time, you've wasted money, and more importantly, you've wasted a skill. Another reference would be, and I think I mentioned this in the previous podcast, not only my personal gambling history and me and my buddy creating a professional gambling strategy, but how it was very similar to Richard Dennis and the Turtle Traders, right? The Turtle Traders, their goal was simple. It was a trend following system, and their goal was to catch the big moves. But in order to catch the big moves, they had to sit through strings and strings of losses. I'm talking double-digit losses were routine. Now, imagine trying to do something like that when you're trading with big size, right? Instead of, taking those little hits, and surviving it and waiting for that big wave to come and ride it to financial glory, you probably went broke. And then that big win came, but you couldn't get involved because you had no money left, right? So don't underestimate the ability to financially bear the burden of making mistakes, whether it's on an individual strategies basis or whether it's just in your educational journey, giving yourself enough time to be bad until you can become good. Now, the other side of the argument, right? Trading small is bad, because this is a real argument as well. If you are someone who is reckless, if you are someone who chases trades, if you overtrade, if you just happen to ignore your rules and you go off a gut feel and you do what you want, then yeah, trading small might look safer because, oh, now I can do more bad things and get away with it. But let's be real. That's just an excuse to keep making bad decisions. That's your way of justifying doing bad because, oh, I can do bad and it doesn't hurt me, so I can do more bad, right? It's very similar. It's I've got 2 young kids and I guess they're getting older now, but growing up, where it's I don't want to say we were very strict parents, but if your kids do something wrong, especially during that age of 3 or 4, where they're testing you out, oh, the terrible 3s. Oh, I guess it's the terrible 2s technically, but the 3s are worse. We made it through the 2s and we were excited. We high-fived and were oh, clear sailing from here on. And 3s were horrible. And there's a reason no one talks about the 3s, because they're worse than the 2s. But during that terrible 2 and even more horrific 3 age, kids are trying to learn their boundaries, right? Kids are trying to understand what they can get away with, so they start developing that idea of I can do this, but I can't do that. So as parents, we were very strict. Not super strict. I let my kids have a lot of freedom and explore. I think that's the best way to learn. But as far as if you break the rules, I'm not going to let you get away with it. Because if I let you get away with it once, guess what you're going to do? Or guess what they're going to do? They're going to do it again. They're going to do it again. They're going to do it again. And then they're going to build this mindset of hey, I can do this because even though I'm not supposed to do it, I don't get in trouble when I do it. So why would I stop doing it, right? So this is the same concept here. You keep making those bad decisions. You keep justifying those bad decisions. But the difference between being a kid who doesn't really have any responsibilities or nothing at stake and being an adult man or woman in the financial markets where lots of money is at stake is that you're going to blow your account. Now, either way, you're going to blow your account. If you're trading with too large of a size, you're going to blow your account quicker. If you're trading with too small of a size, you're going to blow your account more gradual. Either way, you are on your way to the poorhouse. You're either going by train or you're going on foot, but eventually you're getting there. And one can even argue, don't get me wrong, blowing your account is bad no matter what, but one can even argue that blowing your account slower is even worse because you waste the one thing in life that we can never get back. Time. So going back to where I stand on the topic, I love the comment. It was good and inspired this podcast, but I still think trading small is a massive advantage because it shifts your focus away from money and it puts your focus where it belongs. It puts it on your execution. It puts it on your consistency, and it puts it on taking good trades over and over and over again. It gives you room to grow. It gives you room to fail. And it allows you to operate in the market with the freedom to make mistakes and not feel like if you do, it's the end of the world. And if your response to that is, well, that just means I can make more mistakes, so now I will, then that's not a risk management issue. That's a mindset issue. So I'll leave you with this final quote, and this is from the late and great Mark Douglas. I forgot what book it is, but it's probably Trading in the Zone. I remember that one more than Disciplined Trader. But Mark Douglas said, trading smaller made me rich, while trading big kept me small or made me broke. Now listen, all that being said, I am yet just a man, and just one man the last I checked. So I want to hear from you. What do you think about this topic? Is trading small helping you? Is trading small hurting you? Where do you find yourself on the debate? Do me a favor, head over to the YouTube community tab or the post tab. There's already a poll question up there. Share your vote there, or just drop a comment below. I love to read them. Remember, this entire episode came from one of your comments, and who knows, maybe something that you write in the comment section below, whether it's on this topic or something else you want to discuss, maybe that will become a future Trading Coach podcast episode, because after all, this podcast is for you, by you, So don't be shy. All right. I appreciate you guys as always. Like, follow, share, all the fun stuff you're supposed to do. And until next time, plan your trade your plan. Take care. Oh, and shameless plugs. I don't do it enough. If you are interested in becoming a more disciplined trader and working with some great trading coaches and an even better community of traders that will shame you into keeping you on the right track, head over to www.tier1trading.com. Accountability is key to consistency. Accountability is key to working on your trading psychology. When you surround yourself with like-minded individuals, you feel bad about making mistakes and therefore you start eliminating your mistakes. I'm just gonna give it to you straight. All right, tier1trading.com. Love to see you over there. Take care.